Is it actually possible to buy a home with no money down, or is it just a total gimmick? Welcome to Loans Elevated, the podcast that brings you the latest industry news, expert interviews, and insightful discussions that will help you stay ahead in this dynamic market. I'm your host, Broch and I've spent years in the trenches of the mortgage industry, helping individuals and businesses navigate the complex landscape of real estate financing.
I'm your co-host, TJ Heidenreich, and together, we'll cover a wide range of topics, from business strategies that skyrocket your success to mindset and motivation that fuel your growth.
Hey, don't touch the mic.
Okay.
You're not a rapper.
I'd like to be.
God, well, you won't ever be. All right.
Okay. All right.
So you said the biggest myth.
No, stop. You don't get to hijack the takeover now. No, you don't.
I'm going to hijack the takeover.
Nope.
Yeah.
All right. Number one, biggest myth in our industry. You need 20% down to buy a house. And then you and I questioned, no one says that. Only 80, I think you said 87-year-olds say that. We looked that up. The demographic is millennials and Gen Zers.
Which is a sad deal.
Stupid. I mean, if you are waiting to put down 20% down on a house, you are playing a losing game.
Well, and here's the crazy thing. We followed up. We're talking to ChatGPT on this. We followed up with a question of, well, I don't know what the question was, but it said this is often caused by supposed TikTok finance experts and parents and family members giving advice. And it's like, I think we might be saying this too often. Like Ryan and I, for a while, got on a kick of being super pessimistic.
Yeah.
And now I think we're saying this too often, but I don't know how many more times we need to say it. Stop listening to the advice of people that are not experts in housing and mortgage to get your housing and mortgage advice.
I agree. Well, the thing that I keep going back on is it's a losing game because the amount of money on a 500K, what is 20% down on a 500K house?
100 grand.
100 grand? I can't do math. I can't do math in front of the camera. Dude, it's like, it goes to the point where it's like, math just goes blank. I have to have it in front of me.
What is
the simplest math? But anyways, 100K down, that is, I mean, saving up 100K, it's not an easy feat. I'm looking up how much can the average American save in any 1 year.
How much can they save in 1 year is what you're looking up?
Yeah,
I'll bet you that's like $5,000.
Because I bet the average salary here in Utah is like 60 to 80 grand.
Probably. But everyone lives
above their means.
Or at their means.
It's loading. Yeah, I mean, yes. Point being, let's see. Okay, it just came. Wow. Average. Okay, so median household income 2024 is $75K.
In America?
Mm-hmm.
Oh, wow.
Yep. Average annual savings would be $2,250 to $3,750 in a year.
So you only have to save for 35 years.
Yeah, 26.7.
To save 100 grand.
So that means that if you were to buy the house, you'd almost have the house paid off by the time someone saved up.
And it would be worth millions.
Yeah.
Yeah.
Stupid.
So that's nuts. We got on this kick. Really what we're trying to understand also is like, what are the questions being asked by people who are considering buying or investing in real estate? One of these questions is it actually possible to buy a home with no money down, or is it just a total gimmick? And shockingly, it is absolutely possible. And in this particular market, probably unlike any other. Maybe I've seen another similar market condition in my career, but that's been a 17-year career. Maybe one other time I've seen this, but you can legitimately get into a house with no down payment, no closing costs out of pocket. You even get your earnest money back. We just had multiple people do that this month.
I've had someone get their credit cards paid off. They had credit card debt. They walked out, no money down plus zero debt because they got their credit cards paid off.
Which is nuts. So that's on a VA loan, which is a cool little hack for those of you who don't know. A VA loan allows seller concessions to apply towards the veteran's debt that has nothing to do with the mortgage. So credit cards, for example.
Yeah.
Which is crazy. So it is legitimately possible. lots of people get skeptical about this, and I think rightfully so. We're not like just ultimate fanboys of 100% financing.
No.
I mean, in fact, rarely.
Yeah,
unless it is a VA loan.
The situation has to make sense, but it's like we don't want to get someone into a situation where they're upside down in the house. Or
the reality is, though, that's one thing that's critical to bring up.
Mm-hmm.
Can you get 100% financing? For sure. And no money out of pocket, period.
Mm-hmm.
But not could you be underwater. You will, for sure, be underwater on the house.
Yes.
You will be underwater on the house.
Yeah.
Because there is, on any of these programs, I mean, I guess maybe the one time you wouldn't be underwater is a vet who is has service-connected disability and doesn't have a funding fee. That's the one time that 100% financing or no down payment loan would put a borrower in a position where they're not underwater. They're just at 100% financing.
Yeah.
Outside of that, every other program, you got mortgage insurance that gets wrapped up in. So not only are you financing your down payment, but then on top of that is the upfront mortgage insurance. So you're signing up to be underwater.
Well, yeah, which I mean, I don't even think buying a house in general makes sense if it's a short-term plan. If it's a 1 to 2 year thing, right now is not the time to buy.
Yeah. However, I would challenge that in saying a 1 to 2 year thing, people get caught in that mess of like, well, I'm only going to be here for 1 to 2 years, or I'm only going to, like, if you can just commit to owning that home.
Right.
For, I would say somewhere in the range of 3 to 5 years.
Right.
Minimum 3, probably.
Are you saying like converting into
5.
a rental?
Right.
Yeah.
If you have a life event that's going to cause you to move for some reason, say in 2 years, buying still might make sense, just so long as mentally you know, when I have to move, I've got this weight behind me, which is the house, and it could actually be a propeller, frankly, depending on what the market conditions are. But you have this thing you've got to deal with. You may have to rent it out, or maybe the market conditions are good and you sell it and profit, whatever. But like buying a home doesn't hurt you or tie you down. You have many options to manage it like the asset it is. So you just have to agree, or I guess swallow the pill of having the burden of the home, even if you have to move for 3 to 5 years. I would let's just say 5 years for this conversation.
Which 5 years, even 3 years would definitely make sense. And the reason how I came up with that calculation is the cost to sell a house is going to be, I'd say on average right now, anywhere between 6 to 9% cost to sell a home, because you've got to pay commissions for a buyer and seller agent.
Yep.
And then as well as any sort of concessions you have to offer to the buyer of your home, which we're seeing on like 80% of our transactions right now.
Yeah, getting at least like several thousand.
Yep. But again, to your point, if you're holding it for, and we're circling back a little bit, the home is probably appreciating anywhere between 5% to 10%.
Let's just say 3 to 5%.
Yeah.
Very conservative.
That's ultra conservative, because last year was like 6%.
Right.
Yeah.
So like, let's just say 5%. You're
So that means it'd be 2 years before you'll be able to recoup those.
Yeah, and then you break even, worst case scenario. But here's the thing that I say. Now, it is a gamble. It is something that you have to recognize. It's a risk you're taking. You may have to manage things. There may be more, there might be more headache than if you didn't own a home. But if you're renting a house and you're renting it for $2,500 a month, well, if you're going to rent for 24 months, that's a $60,000 loss.
Does not make sense.
Out the window for sure, guaranteed, 100% guaranteed loss. On the house, you pay a mortgage payment, you got tax benefits. You might not be able to sell and make a profit, but you don't have to sell and take a loss either.
No.
You just rent it and let it roll. And then
even if you're negatively cash flowing by a couple $100 a month, it doesn't matter in the long run, because you're making so much on the appreciation of the house and the tax benefits, to your point. You got to think of it.
And those tax benefits actually get better when it becomes a rental, or they could get better.
Yes. And with these higher rates too.
So you think about that like a $500K house, like you were saying, 5%, you're making $25,000 a year. So in 2 years, you've made $50,000 in equity back. Now, granted, the costs to sell, which are a different part of the equation, those costs to sell have to be recouped, but you don't have to freaking sell.
No.
And 5 years down the road, it turns into a massive
The market can also change quick too. Who's to say in 2 years from now, rates aren't a little bit lower, less homes on the market, meaning more competition and less seller concessions.
Well, we
being
saw
offered.
this in COVID.
Exactly.
We were seeing home price appreciation at 1 or 2 or 3% per month.
Yeah, one year we saw like 23% appreciation in our area.
Yeah, we were like home prices were going up thousands of dollars a day,
Mm-hmm.
literally.
Yeah,
I mean, it was
seriously.
nuts.
Yeah.
Yeah. So I think you don't need 20% down. That's for damn sure.
Mm-hmm.
100% financing is legitimately possible. So the one thing I say is we talk to so many clients, even if they're not stuck in this supposed myth, which is crazy that people think you need 20% down. But even if they're not stuck in that idea, and they're stuck in an idea that like, you know what, I just got to get my debts paid off, or I've got to just save up a small down payment, or I've got to, whatever the case is, very commonly people are saying, I'm going to wait because I have to save for something or I have to pay off the debts. And I think personally, that's probably, that's 95% or more of the time a losing bet. You may as well just go 100% financing because you're going to have a housing expense anyway. So what in the world are you risking? There's no
really
added
isn't.
risk.
There
It
isn't.
feels risky because you now have an asset, actually what people think is they don't view rent or a housing expense as a liability, and they view buying a house as a liability rather than viewing it as we view it so naturally that I just said it without even realizing it as an asset.
Mm-hmm.
Like people don't logically think through that very often, or at least those that are not buying.
Yeah, they it's too emotional sometimes too.
Yeah, it's crazy. So if you're renting and you're thinking, man, I should just wait to pay off my debt or whatever, TJ was kind of touching on this. Like, it's going to take you a while to pay off your debt. You're only, I mean, even if you're an aggressive saver, we're talking just a couple thousand, not even that probably, like 1,000 a month maybe. If you have like no housing expense, you get a regular job, you're trying to wipe out debt. Well, you not owning that $400,000 or $500,000 property is costing you a couple thousand a month in lost equity. You can't ever get ahead.
No. And thinking back to this too, if you have the money to put down, like let's say you've got a USDA or a VA buyer, you've got 5 to 10% to put down. You might be underwater because you paid a VA funding fee if you choose to put down 0%. But then what can you do with that 5 to 10% down you had? Can you invest that elsewhere to make more money? Because whether you own 0% of your house or 10% of your house, it still appreciates at the same rate. It appreciates based on the value of the house, which we've touched on this on previous episodes. But now you've got your money working for you in other areas. Then if push comes to shove a couple years down the road, well, if you had to pay, if you are underwater or if you have to pay something that you weren't expecting, now you've got it sitting in another account that's been working for you. You can pull from that and it's a win-win.
Well, and what's weird is a lot of people get tripped up in this idea that it's like virtuous to walk into a mortgage with no other debt or to put a down payment because that's just what you ought to do.
Yeah, that's what Dave Ramsey told me to do.
It is not virtuous. It's oftentimes stupid because if you're going to put a down payment on a house and you have other debts that are costing you a lot of money per month, does your home and auto insurance seem to go up every year without fail? Mine did too. I thought this was just the way the insurance industry worked until I found my friend Alan Johnson with American Family Insurance. After more than 15 years with the same insurance agent, he saved me over $3,000 per year when I switched. I refer all my family, friends, and clients to him, and their experience is similar. Great rates and a great experience. Call Alan for a free quote today at 801-708-2962. Forget about the interest. Like, there is some consideration of how much you're paying in interest versus how much the mortgage is going to be. But forget about that for a minute. Just the sheer cost out of pocket is tremendous with other debts as compared to a mortgage because you can amortize it for so long. So like it's not just like a really cool, like virtuous thing to put a down payment because, man, I put a down payment. Like, we're talking about financial investments here. Like, if you skin it all the way down, get rid of the emotions, this is a financial investment. Do you want an ROI with zero investment or do you want an ROI with more than zero investment?
Yeah.
You want an ROI with less invested. If you can get the same return,
Yeah, what I find, you and I talk about this a lot. The most important thing I find when talking to someone, because we do this so often, is their net out of pocket.
Mm-hmm.
And sometimes they buyers are so zeroed in on their exact monthly payment, and they want to put down a lot, but then they forget about all these other debts over here, auto loans, credit cards. That we should analyze all of it together for your total net out of pocket on a monthly basis. Well, if putting down a down payment on the house doesn't affect that net out of pocket that much, let's allocate that towards paying off the auto loan or the credit card. That's going to do way more bang for your buck and feel a lot better on a net out of pocket basis.
Yeah. Or getting, even considering getting furnishings for the house,
right,
or making repairs or renovations to the house. Like, lots of people are like, well, I'm going to get in the house, I'm going to put the down payment, I'll worry about getting the debt paid off later. We need to renovate, but I can just get a personal loan for that. And it's like, so often people forget how beneficial mortgage debt is in comparison to any other. Of course, the best scenario is zero debt, period, end of story.
Yeah, you're talking top 0.01% of Americans
right.
can really do
but
that.
Lots of people are like, well, I just, I want to get that mortgage paid off, but they'll almost dismiss the significance of other debt. And they're like, well, I could get that paid off in 5 years. The hell you can, because we work with clients. I've worked with clients for going on 20 years. The same clients I helped, 15 years ago, come to me today, they still have debt. They probably have more debt, and they still have a mortgage. Like, it just doesn't work out that way. So I think it's a lot of emotional decisions. But let's dive into the nuts and bolts of, yes, 100% financing is available. You can make it happen. You can actually be 100% zero cash out of pocket, and on a VA loan, maybe even negative. So we got VA loans. That's 100% financing for qualified veterans. We have USDA loans. These are options for rural or suburban areas that qualify. We can let you know what qualifies, but here in Utah, Tooele qualifies, Stansbury qualifies.
There's still parts in Eagle Mountain,
and even Saratoga, I think, that qualify. So, I can't believe Saratoga Springs still qualifies. I mean, that's like,
they're narrowing it down, but there's still areas out there.
Yeah, there's still areas out there. There's lots of places, if you get a little bit further south, which many people live in,
and it's blowing up like crazy out there. There's so much infrastructure going on out there.
Yeah, it's wild. So USDA is a great option. Now, the one thing on USDA is it's way more stringent on, like, the qualifications are tough. They're not. It's a pretty hard loan to qualify for, which is why
more
it's
hoops
less
to
common.
Jump through. Debt to income ratio needs to be a lot.
You have to
tighter.
be like cream of the crop borrower.
Credit just makes it hard with these rates right now.
Yeah, it does. One of the most common, because those two, VA and USDA, they're awesome. I would say probably our favorite too, 100% financing loans.
Yeah.
But they're not broadly available to everybody or all areas. So the one that we commonly work on is Utah Housing. And Utah Housing is a bond-funded program that provides down payment assistance for first-time homebuyers and step-up homebuyers, people buying a second home. Not a second home occupancy, but a second home. You still have to occupy the home as your primary, but Utah Housing will fund the down payment and even subsidize closing costs for, rarely do people not qualify for that. Almost every home buyer we work with would qualify for that.
Yeah, you just need to have a credit score above 620.
Yeah, which is easy. And even if you don't, we have tons and tons of tricks to figure that out.
To get it above that.
Yeah. So Utah Housing, I think, is a great one. They're actually about to come out with, like within days, a new one that is even more affordable. It funds the down payment, is kind of perfectly situated for this type of housing environment where sellers are paying closing costs, because this new one doesn't allow you to subsidize closing costs, but it'll fund your whole down payment, and there's no payment. You don't have to make a monthly payment on it. It's just a silent second mortgage until you refi or sell, which is really cool. So Utah Housing.
So going back a little bit, when you refinance and or sell, you do have to pay that back. So
on any Utah Housing loan, basically. USDA and VA, no, you don't, because it's just one mortgage. There's not a second down payment assistance mortgage. But additionally, if we kind of veer into low down payment, maybe not no down payment, but low down payment, you've got grants. We have grant programs that'll pay thousands towards your down payment, which is really cool, or closing costs, whatever. And
Yeah. For example, we've got a grant here at Cross Country Mortgage, which is $4,000 that goes towards, it's 3% down, but then that 4K can go towards that 3% down. 100% the buyer's money. They don't have to pay
I
it
think
back.
actually some of them we can get up to 5,250, 5,250.
Right. For it's true.
Yeah.
So
But to your point, you don't have to pay it back. Free
100%
money.
their cash.
Yeah. Really cool.
Mm-hmm.
So, yep, go ahead.
Other things we look into, because Utah housing, while it's a great option, I think Brock mentioned this, it's our last resort because it's not the cheapest option in the long run. Now, it's still better than renting. You're still going to have a better ROI than renting. But questions we're going to ask the borrower first is, do you have some sort of retirement, a 401k, or something you can borrow against? Because you can put as little as 3% down. The majority of our clients have some sort of 401k they can borrow against, and they could do a hardship loan against it, which is better terms. And that's 10 times out of 10 the best route to go, because they get first-time home buyer terms. They don't have to have a second mortgage. Oftentimes it's conventional, and they're ready to rock and roll.
And any interest they're paying back on those when you borrow from the 401k is going back to yourself. So we do try to audit that. Like, if you can avoid down payment assistance, most of the time it makes sense. Now, if you're a veteran or qualify for USDA, different story. But on the down payment assistance programs, you'll pay fees that don't exist on other programs. So the idea is, like, we're trying to help avoid those fees.
And these fees can be like 1 to 2%.
Yeah, it's like we're talking thousands of dollars. It's just gone. It's money spent, gone forever. So I think that's a big one. A couple creative ways that I've worked on this too is, if people have a car that's free and clear, go get a credit union loan on the car that funds your down payment, and now you don't have to do a second loan. So as long as you can afford it, obviously we got to qualify you with it, but that helps you avoid the extra fees on down payment assistance. And even for those that have cash in the bank, this is something important, I think. For those that have cash in the bank, if you have a down payment, we are not going to recommend a down payment assistance program. We would recommend VA or USDA, but not like a Utah housing loan, because the costs are just overbearing. But we might recommend, even if you have cash in the bank for a down payment, we might recommend going to still get tap into the 401k to fund the down payment, so you keep some cash liquid. Right. So I guess the only other thing we could talk about, if you could avoid down payment assistance, even though it's fully available, you can be zero out of pocket. Doing joint ventures is one of our favorite things.
And it's been way more common as of recent. Yeah.
Because family members want to invest in real estate. They want to help their
That's how I got into real estate myself.
Right, 100%. And so many people. That's what happens.
Like, I started working with you 2018. I started closing loans, but I didn't have a nest egg built up. I was trying to pay for college, do other things, $0 to my name. But
documentable income.
Yeah, or documentable income for that matter. So I had my dad joint venture with me, co-signed on the mortgage, used his funds for the down payment of 3% or 5% in this case. And then later down the road, we had a joint venture agreement written up that because I was making monthly payments, I got X amount of the equity gained, and he got X amount of the equity gained because he helped me get into the house. So it was a win-win for him, because
he literally made profit.
He made over $100,000.
Significant profit. And it didn't cost him anything.
Exactly.
He got his down payment back. You made all the
exactly. Yeah. Later on, we refinanced, were able to pay him off, and it was a win-win.
Yep. Huge.
No brainer.
Huge. So if you have family members out there that are considering, they might help you. There's so many ways that we do this. Like TJ mentioned, co-signing. That's a joint venture. They could earn equity in the property just for helping you qualify. And then, of course, you guys got to have some agreement and be responsible enough to pay it. Like gift funds for the down payment. It doesn't even have to be gift. If they buy it with you, it could just be like a legitimate co-investment, and they own the property, so it's not a gift. But some other, I guess the main other creative option is payment subsidy. Yeah. So you got a family member, maybe you've got the down payment and you want to buy a house, but you can't quite afford the full payment now. But you're going to graduate school, and in the next couple years or whatever, you're going to definitely be able to afford the payment. Well, just get with a family member who's willing to joint venture, and say you need $1,000 a month of the payment covered by this family member for 3 years. Well, maybe they're willing to invest $36,000 over the next 3 years, and in exchange, they get 50% of the equity that is earned by the ownership of that property over those 3 years, or until you refi or sell. So
that's a great strategy. Sorry to cut you off, but that's a great strategy for someone that has the cash up front that can invest into this, because that might make more sense. If they can have that sitting somewhere, making more money for them, and then just pull for that on a monthly basis to give, it could work out. It could compound in their favor.
Or somebody that maybe they don't even have the cash, but they just earn a lot.
Right.
And they have plenty of cash flow. They're like, yeah, I'll help you. $1,000 a month, no problem. And you just set the situation in place, but they get to just like, it's an opportunity. It's kind of like a business arrangement for people that you know, and they care about you and they want to invest in real estate. You both get to make money, and you don't get stuck in this very expensive cost of waiting game, which is really the biggest
It's funny
thing.
How much more common this is being. I mean, 5-6 years ago, this just didn't happen. We didn't ever see it.
Yeah.
Now we help 1 to 5 families a month going down this route.
Yeah. Lots. Yeah. It's very common. And I think, so the only thing I would close with is saying the themes here are, you can get 100% financing. You should buy a house as soon as possible, because the cost of waiting is wickedly expensive. You can't ever keep up. Even in the markets that we've seen now, which has been the lowest sales, the most depressed housing market in 30 years or something like that, and the highest rates in many, many years. It's the most challenging market we've seen in decades. Yet home prices are still appreciating at a significant amount. People are still making profits. So waiting, you'll never catch up with it. And there are creative ways. You just need somebody who is thoughtful and strategic and can help, like experienced. We've done thousands of loans. We've seen thousands of different scenarios, thousands of different familial situations. Like, we have so much experience that we can kind of help guide through ideas and thoughts, and it just even be like an inspiration machine for ways to make this happen for you and or your family. So I would say lean on us. We love helping people accomplish this homeownership game that we're in, and we would love to help you.
For sure. Anyways, guys, hope you enjoyed this. If you haven't already done so, please like, comment, and subscribe. Hopefully by the time this drops, we're at 500 subscribers.
We have been working our asses off.
But if not, if we're at like 499, look at the amount of our subscribers. If we're not, just subscribe. Be the 500th. We'd love that.
Or the 1,000th.
Exactly.
Maybe we could hit 1,000.
Exactly.
Yeah.
So,
Cool.
Sweet, guys. We'll catch you next time. Thank you for tuning in. For more industry insights, follow us on all platforms at Loans Elevated.
And to get in touch with our team, call or text 801-713-4000 or visit loanselevated.com.